Welcome guys to my new video upload. Millionaire Maneli speaking, Millionaire Maneli in the cut. As promised guys, I said I'll make an upload on how to trade fundamental. This is the first step as a trader. I think it's the first stage of any trader guys. Some people prefer being a fundamental trader, some prefer being a technical trader. You need to figure out which works best for you. If you're more profitable trading fundamentals, stick to fundamentals. Don't change to technicals. You can change or you can learn about technicals, um, just to broaden your knowledge within the forex industry or within the trading space. But if technical analysis or technical trading works best for you, stick to it. Stick to it. Or you can incorporate both and have two different accounts. One for technical trading, one for fundamental trading. So in this video, I'll be showing you guys how to trade fundamental. Fundamentals are basically news events that happen all around the country. That basically happen all around the country. Global news that affect the currency movement or the price of any um, pair or quote. So how of firstly you need to make use of investing.com, the app investing.com. I think you should download it on your smartphone or on your laptop. Have the app. So on investing.com, we make use of this platform only for one reason, and one reason only, is to get the economic calendar of all the countries at certain times. It's basically an economic calendar that shows us the events that will be happening throughout the week. But do note, guys, or bear in mind that I only trade events that only have 3 stars. So these stars, they basically signify the importance of the event. 3 stars meaning it's very important. It might have an impact on price movement, and then 1 star being the least important. It has no or slightly little impact on the market. So as you can see, this is the economic calendar for next week from the 29th of March up until the 2nd of April. I'll kick things off. Let me select one event. Let's say on Wednesday. I just want to make a quick example. On a Wednesday at 2 o'clock, you have GBP, gross domestic product, GDP, QOQ, Q4, meaning it's a quarterly event. So QOQ basically means it's a quarterly report, and then YOY means that the event happens on a yearly basis. It happens on a yearly basis. So here, so as a fundamental trader, you need to take note of the following. So when if you wanna predict the price movement or what will the actual report of the event or the outcome would be, we study the actual and the forecast. So the trick here is to take the actual to the forecast, meaning we have to move from 1% to 0.5%. So for you to move from 1% to go down to a 0.5%, you had to subtract. It's simple maths, right? 1 minus 0.5 equals 0.5, right? So meaning it's a subtraction, so therefore you will sell. So a minute before the event starts, you'll go to your GDP pairs, GDP being the base currency, you will sell, and then GDP not being the base currency, meaning it's on the other end of the quote, you'll buy, meaning Euro GBP you'll buy, or NZD GBP you will buy, right? So yeah, that's how we trade fundamentals. The reason I always tell people to enter a minute before the event starts is because of spread manipulation. Remember, guys, brokers are aware of um, fundamental trading, because fundamental, it's a high volume type of trading. Within 2 minutes, you can make a million. Within a minute, you can make R1 million. So brokers are well aware of fundamental traders because they pose a greater risk to the market as well as to the broker, because they are able to generate large amounts of money within a short period of time. So if you can enter at 2 o'clock, you'll see that the broker has opened up the spread, meaning either you buy or your sell position will be up there or down there. And then the market will be choppy, or it will play somewhere in the middle. And then as time goes by, they'll take back the spread to its original spread, meaning if the spread was 2, it'll go back to 2. But when the event starts, you might check, they'll open up the spread might be 30 or 35. On a small account, that might cause some damage, as well as if you didn't use proper risk management and you used a greater lot size, you might be in trouble. So always enter 1 minute before the event starts. You can also download, make use of the app Stopwatch. You can have a stopwatch to tell you it's a minute before, or you can even enter 30 seconds before to be precise. You can enter 30 seconds before. So yeah, guys, always remember that you always take the actual to the forecast. So let's look for another event that I can make an example of. Okay, we can say at quarter past 8 USD, ADP non-farm employment change. See, did a sell also. So here, guys, it's vice versa. You can see our actual is 117,000, 117,000, and then our forecast is 177. So from you to move from 117 to get to 177, what did you do? You had to add, right? So when you add in the forex term, you buy. So a minute before, meaning at 8:14, you go to your USD quotes. If USD is the base currency, you buy. If it's not the base currency, you sell. Meaning NZD USD, you'll sell. USD CAD, you will buy. You will buy. Remember to enter a minute before or 30 seconds before to avoid spread manipulation. And then yeah, so yeah, that's how I learned how to trade fundamentals. It actually it's a powerful strategy as compared to pending orders, because if you trade using pending orders, your orders might get triggered up, then the market will come back down and play in the middle, and it might range in the middle if you have your buy stop and your sell stop. Because if you have your buy stop and a sell stop, say if the market goes up to a certain level, it'll drop. Hence, it will trigger a sell stop up there. And if it drops up to a certain level, it will reject off this level and then it will buy. So the market usually on NFP, it's very risky to trade with pending orders, because it might trigger both of them and then range in the middle. Think about that. It triggered your sell stop and your buy stop at the same time, and you've used, maybe let's say on 1,000 Rand account, you've used lot size 2 for each position, for each um, for each of the two. So you might be in trouble. And remember that the spread has been opened up. The spread is much more wider. So now even greater losses because of that. So I don't recommend the pending order strategy to anyone. This one is much more accurate, because you're studying data, guys. Studying data. So you're studying that you're making. So for you to predict the future movement, you're looking at the previous events report, as well as the forecast. Remember, the forecast has been set out by economists. They predict that the actual report that will come out at a specific time will be this. And most of the times, the economists, the ones that predict the reports, they're usually correct. They're usually correct. So on a scale of about 100%, I'd say this is about 85% accurate, and then the 15% is for the drawbacks yeah, things that are way beyond your control, right? Even the control of economists, because they're also predicting, right? So that's how we trade fundamentals, guys. Hope you guys learn. Please make you practice the strategy on your demo accounts, and on the comment section after trying it out, please comment and tell me whether it has worked out for you. Have you made profit? Have you made progress or not? And then I could advise you on what to do. And then there's certain events, guys, that you need to take down off. If they've worked for you, only trade those events. Don't be a jack of all trades if you wanting to trade all these events, because now it'll be hard to make progress, because this event might make you profits and the next one might blow you. This one might make you profits, and then when you look at your trading history, that losses, profits, losses, profits, losses, profits, it's important to take note of the event. Best for you. Thank you, guys. Peace out.